Be Wealthy and Smart, episode 1581.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why markets are under pressure. Markets dropped sharply on Monday and Tuesday, and we're having a bit of a relief rally today. In the background, the Supreme Court will hear oral arguments to decide the fate of President Trump's trade tariff. The lower federal courts ruled that Trump lacked the legal authority he cited under the International Emergency Economic Powers Act, or IEEPA, to impose the so-called reciprocal tariffs on imports from many U.S. trading partners, with fentanyl tariffs on products from Canada, China, and Mexico. The court said Congress, not the president, has the power to enact tariffs in that manner. The tariffs start at a baseline of 10% on many nations and spike to as high as 50% on goods from India and Brazil. Treasury Secretary Scott Bessent said that even if the court rules against the administration, there are still lots of other authorities that can be used. He said, "There are lots of other authorities that can be used, but IEEPA is by far the cleanest, and it gives the U.S. and the president the most negotiating authority. The others are more cumbersome, but they can be effective." Specifically, Bessent cited Section 232 of the Trade Expansion Act of 1962, which provides a justification on grounds of national security, as well as Section 301 of the Trade Act of 1974, which regulates unfair trading practices. Bessent said, "This is very important, and SCOTUS is going to hear this," referring to the Supreme Court. He said, "This is a signature policy for the president, and traditionally, SCOTUS has been loath to interfere with these signature policies." So we have that going on in the background while the government is still closed. And I didn't think we were getting any economic data, but we did get a report from ADP, which investors continue to use alternative data in lieu of government reports. So ADP reported today that private companies saw their payrolls rise by 42,000 in October, which beat the Dow Jones forecast of 22,000 and comes after September marked a drop of 29,000. So that's very positive news from ADP on the job front. And since data and information are scarce, getting reliable information, especially positive information, is a good thing. We also got information from the ISM Services Index, which rose 52.4%, up from September's 50%, which is the break-even point for overall expansion. Economists had been looking for 50.5%, so at 52.4%, it signals that the economy is growing. The services sector was pushed by new orders and general business activity as imports receded, according to the Institute for Supply Management. Internally, the new orders index was up 5.8 points to 56.2%, while business activity rose 4.4 percentage points to 54.3%, and inventories increased to 49.5%, still technically reflecting a pullback, but better than September by 1.7 points. Employment was still in contraction territory, but better by a point to 48.2%. Order backlogs slumped to 40.8%, a decline of 6.5 points, while imports fell to 43.7%, off 5.5 points. The prices index edged higher to 70%, indicating strong inflation pressures. Survey participants indicated that sentiment went from solid to neutral, while one trade executive commented that business was very strong, no supply chain or logistical issues. The earnings this year have been very strong for companies reporting, and we're more than halfway through the season for companies to state what their earnings are, and results have been better than expected. Of the 360 S&P 500 companies that have reported so far, roughly 82% have beaten expectations, according to FactSet data. The S&P 500 is set to post a blended growth rate of more than 12%. Yeah, so earnings continue to be good. Interest rates are holding their own and expected to possibly go lower, although markets are a bit confused about whether Fed Chairman Powell will lower rates in December or not. But according to the CME FedWatch tool, 62.3% of traders are expecting the Fed to make another 0.25% cut in December at the December 10th meeting. It's also important to keep in mind that markets have been up 6 months in a row, which historically is a very rare statistic. There's very few years ever in history where the market has been up 6 consecutive months. So consolidation here, a little bit of pullback before moving higher is pretty much what can be expected. However, things are looking very positive in the longer term for this bull market to continue. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.